Hello friends, today we are going to learn about C11, Principle and Practices of Insurance. It is one of the mandatory exam in the CIP series. So today we are going to learn about our chapter 1. It's a study 1, Introduction to the Risk and the Insurance. So let's start. First we will learn about the insurance contract. So what is insurance contract or insurance? So there is one party who wants to take a coverage for his defined subject, suppose for his car, which means he wants to take a coverage for his car and will pay a premium, and another party agrees to reimburse in the case of any loss or damage or any liability if the loss or damage has happened due to the specific peril. So first party, who's the first party? First party who wants to take insurance coverage is also first party is also known as insured. The second party is the insurance company, is also known as insurer. The premium is also known as consideration in the insurance term. And peril is the cause of loss. For example, fire, flood, theft, and accident. So according to the definition of insurance contract or insurance, a insurance contract in which one party, the insurer, for the monetary consideration agree to reimburse another, the insured, for the loss or damage for the loss of defined subject caused by the specific hazard or peril. I hope you have clear all these terms and insurance definition. So let's dive into our first chapter. So first term is risks. Risk. So risk is the chance of loss. There are two types of risk: pure risk and speculative risk. What is pure risk? Pure risk is when there is a chance of loss and no chance of gain. That means it is it is pure risk when there is a no profit. For example, examples of pure risks are fire, flood, earthquake, theft, etc. And if we will talk about the speculative risks, when there is a chance of loss as well as chance of gain. For example, gambling, stock market, horse race, and etc. Suppose if a person invests in a stock market, there is a chance of risk of loss of money, there is a chance of risk loss of money, as well as there is a chance of a profit. So it's a speculative risk. So now let's discuss possible MCQs that we have learned so far. Try to answer these questions by yourself, then check it with your check it if you're right or wrong. So our first question is insurance terminology. Risk is dash. Option is A, insured peril, B, speculative in nature, C, chance of possibility of loss, D is uninsurable. Answer is C, the chance of possibility of loss. So our second question is, in insurance terminology, a peril is dash. Option A possible event that may give rise to loss, B, pure risk, C, equivalent of hazard, D, measure of possible severity of potential losses. Answer is A, possible event that may give rise to loss. Third question, pure risk is dash. Option A is the kind of risk that insurer will usually decline. B, entails a chance of loss. C, are speculative in nature. D, is equivalent to the peril. Answer is B. Fourth question, gambling is a good example of dash. Option A, insurable risk. B, personal risk, pure risk, and speculative risk. Answer is D, speculative risk. So these types of risks you can if these types of questions, the multiple choice questions, you can expect in the final exam. So now we will learn about insurable risks. So which is insurable risk for an insurance company? In order to check that, we will ask these two questions. Is there is a chance of loss? Is there is a chance of profit? If there is a chance of loss, then it is a pure risk, and insurance company only cover pure risks. And if there is a chance of a profit, then it is a speculative risk, which is uninsurable. So let's talk about the types of risks. So there are mainly three types of risks: personal risks, property risks, liability risks. What is personal risks? Personal risks are those where the chance of loss arising from the person's on bodily injury, loss of life, or loss of income. For example, death, physical disability resulting from an accident or sickness, old age, unemployment. Property risk. Property risk are those where the chance of loss arising from the destruction of the property to the any property. In the property risks, loss are two types: direct losses, indirect losses. So direct losses are those involving damage or destruction of the property insured and in which affect the subject matter. For example, there is a fire in the house, and a fire was happened due to the smoking, and then the house was collapsed. In this case, the fire is the direct loss which damaged the house. And if we will talk about the indirect loss, losses occur because of the direct losses. For example, there is a fire in the house, and the fire was happened due to the smoking, and then house was collapsed, and the person was earning income from the rent of the house. If the house was damaged, the person is not earning any income. So in this case, fire is the direct loss which damaged the house, and loss of earning is the indirect loss which has occurred because of the direct loss. I hope you have uh, cleared these points. So our third point is liability risks. Liability risks are those where the chance of loss arising from an individual's obligation to pay damages because of the injury or death of another or damage to another property. This obligation would based on primarily on the individual's negligent acts in the relation to his or her conduct, the operation of the automobile, aircraft, snowmobiles, truck, etc., and the ownership or occupancy of property, the manufacture of any product, the rendering of professional services. So now we will learn about the classes of insurance. So there are three classes: personal lines, commercial line, and special risks. So personal line, insurance of personal things, and the insurance relating to individuals in their private capacity, including our home, its content, automobile, seasonal dwelling, boats, jewelry, uh, major medical and surgery cost, etc. And some insurers and insurance agent and broker may split into two departments. They call it personal automobile and personal property. The second class of insurance is commercial lines. The insurance relating to the commercial operations such as store, professional offices, trucking operations, construction vehicles, contractors, and many other similar businesses. Special risk is very special. Special risks are marine exposure. For the marine exposure, aviation's high risk industrial operations. So now we will look at the possible MCQs that we can expect in our final exam. And till now, we have covered our first objective of chapter 1. And for other parts, please subscribe my YouTube channel, and if you like my study style, then please like and share or or comment. So let's see MCQs, but these MCQ examples, find answers by yourself. I will not help you in these three questions. So first question is: a fire insurance policy dash option A can be assigned by the insured as wishes since it is personal contract. B, assigned without the insurance contract only if the property is sold. C, can be signed without the insurance consent only in certain circumstances. D, cannot be assigned by the insured under any circumstances. Answer you have to find by yourself. So second question is example of personal risks. Option A, death. B, marine losses. C, accident in factory. D, aviation risk. Our third question is aviation risk is an example of dash: personal line, commercial line, special risks, or option D, automobile insurance. If you want to download free notes that we have read so far, then check the link provided in the description. And if you want to buy MCQs ebooks only for MCQs for whole book, you can buy it. It's for C11 principle and practices. You can find the link in the description. If you have any doubt or any other question, please ask me. I will happy to help you and happy to answer your all questions. Okay, see you in the next part. Till then, like, share and subscribe. Happy insurance learning. Thank you.